Bitcoin just broke 111,000 today, and the headlines driving it are massive. We've got Coinbase teaming up with American Express to drop a new Bitcoin-backed credit card that gives you 4% in Bitcoin rewards. We got BlackRock launching a Bitcoin ETP in the UK, opening new institutional floodgates, and the US government collecting record high tariff revenue, 29.7 billion, up 22.4 billion year over year. Oh, and the government shutdown still dragging on. Tariff tensions with China heating up again. This week, the markets are a storm of risk, opportunity, and volatility. And Bitcoin is right in the center. Let's get into it. What's up, family? It's Coach Massey, and you're locked into the Daily Hodl. This is where we break down the biggest financial news, Bitcoin insights, and market trends so you can stay informed, disciplined, and ready for opportunity. Let's dive in together. First up, Coinbase and American Express are changing the game. Their brand new credit card offers up to 4% back in Bitcoin on every purchase. That means every swipe, every coffee, every bill, you're stacking sats automatically. This is not just another credit card. It's a gateway for mainstream adoption. When a powerhouse like Amex gets behind Bitcoin, it signals confidence. It bridges traditional finance with the next generation of money. Here's what that means, honestly. It normalizes Bitcoin as part of everyday life. And that's what we want. We want global adoption in everyday life with Bitcoin involved. It encourages spending while stacking, making Bitcoin accumulation effortless. And it introduces millions of Amex users to digital assets for the first time. That's adoption. That's expansion. And that's long-term bullish momentum. Now, let's talk BlackRock. The world's largest asset manager just launched the Bitcoin ETP in the UK. And this is a game changer. Here's why it matters. First, it gives UK retail investors and pension funds institutional grade access to Bitcoin through the London Stock Exchange. That means everyday investors can now participate in Bitcoin exposure safely and transparently, backed by one of the most trusted financial institutions in the world. Second, it signals a global wave of institutional adoption. We're not just seeing Wall Street embrace Bitcoin anymore. Global finance is actively integrating it into traditional portfolios. This is the kind of adoption that drives long-term credibility and trust, and that's what we want. You see, this ETP is built on Coinbase custody, ensuring compliance, security, and regulatory alignment. That's crucial because the next $1 trillion flowing into crypto won't come from speculative gamblers. It will come from regulated, institutional-grade vehicles like this one. You see, here's the ripple effect as well. When the world's biggest asset managers open doors for Bitcoin, liquidity deepens, volatility stabilizes, and the market gains legitimacy. This is mainstream adoption happening in real time, and it shows just how far Bitcoin has come from being a niche asset to a globally recognized financial instrument. And BlackRock's a big player in this. Pay attention, because moves like this set the stage for the next major bull cycle, and institutions are already quietly positioning themselves for it. Meanwhile, on the macro side, things are heating up fast. U.S. tariff revenue just surged to $29.7 billion in September, up $22.4 billion year over year, marking 7 straight months of increases. On paper, that sounds like a win for the Treasury. But when you dig deeper, it's not all sunshine. Here's the reality. Tariffs act like a hidden tax. When the government raises them, import costs jump. Companies then pass those higher costs to consumers, and that keeps inflation sticky. Or maybe those companies will eat the cost themselves. And truthfully, it locks them into a tighter policy stance. Even as parts of the economy start to slow, makes things a little, sticky, like I said. Now, throw in the fact that the government shutdown still hasn't been resolved. If Congress doesn't act by Tuesday, we're talking about a standoff that could stretch beyond 40 days, potentially breaking the all-time record. And now that the No Kings rally has happened, maybe there might be some peacetime. Well, that means that paychecks are going to be coming back, and that means that contracts will be fulfilled, and that means the government at least seems like they'll be working together once it, opens back up. Then layer in the upcoming tariff meeting between President Trump and China. This could be a turning point. A deal might cool global tensions, but if talks collapse, we could see ripple effects across commodities, equities, and currencies, basically across every major market on the planet, as you saw with his tweets a couple weeks ago. And right in the middle of it all sits Bitcoin, a digital asset with no central authority, no printing press, and no political games. While governments are wrestling with debt, inflation, and trade wars, Bitcoin continues doing what it does best, staying mathematically sound, globally liquid, and increasingly respected as a hedge against economic dysfunction. This isn't just volatility. This is a test of conviction. And those who understand the long game, the hodlers, the builders, the disciplined investors, know that chaos is where opportunity is born. Now, let's zoom in on Bitcoin. We're above 111,000 right now. And after last week's volatility, that's a big win for sentiment. But here's the key. Bitcoin's path is never straight. It tests patience, exposes leverage, and rewards conviction. As Michael Saylor says, you don't buy Bitcoin to get rich quick. You buy it to preserve your wealth over the long term. And Warren Buffett himself said, be fearful when others are greedy, and greedy when others are fearful. Both quotes align perfectly right now, because while traders panic over short-term moves, the disciplined investors, the hodlers, are building generational wealth. Volatility is not a bug in Bitcoin. It's the feature that transfers value from the impatient to the patient. And that's what separates traders from investors and from gamblers. This week's economic calendar, though, is absolutely still packed, and every single data point can move the markets. We've got Tesla, one of the biggest sentiment drivers in the entire S&P 500, is set to report earnings tomorrow. That'll give us a glimpse into consumer demand, tech resilience, and investor confidence heading into Q4. And we'll see if any of those Tesla protests are going to be exposed in this quarter. On Wednesday, we'll see the latest U.S. crude oil inventory data, a key gauge for inflation pressures and energy demand. If oil stocks rise sharply, that could signal weaker demand and potentially cracks in the global economy. I think it's going to be okay, though. And Thursday brings existing home sales. And housing has been one of the biggest stress points in the high-rate environment. A slowdown there tells the Fed their policy is, biting the hand that feeds them. A surprise uptick, it means the economy might be holding up better than expected. And then Friday is the big one. Inflation data, services PMI, and the University of Michigan's Consumer Sentiment Report. That's a trifecta that could shape expectations for next week's Fed meeting. We're just 1 week away from that critical decision by the Federal Reserve, and traders are already on edge. Every number this week could tilt sentiment one way or another, though we do expect a rate cut, probably 0.25. 0.5 would be awesome, but without all the data and the government shutdown, I don't see it happening. And on top of all that, you've got the government shutdown, again, dragging the tariffs headlines and heating up President Trump preparing to meet China, and markets really hate uncertainty. And we've got plenty of it right now. But here's the key. Volatility creates opportunity. Bitcoin's holding strong above 111K. We're going to be watching that. And that's a line in the sand for bulls. If it holds, it reinforces the growing conviction that Bitcoin is no longer just a risk asset. It's a global hedge against chaos. You need to understand, that market can wash trade crypto. So that's why it's manipulated a lot right now. So when regulation goes through, it's going to be great. Well, here's my question for you. What do you think will have the biggest impact this week? The new Bitcoin rewards card, BlackRock's UK ETP, or the ongoing government and tariff drama? Drop your thoughts in the comments. I want to hear your take. If you got value from today's breakdown, let me know. Write it in the comments. Hit that like button. But more than anything, subscribe to the channel if you haven't already, and share this with someone who loves Bitcoin and financial news as much as you do. And remember, this is not financial advice. It's for educational purposes only. Well, that's your daily hodl. Stay sharp, stay disciplined, and as always, Lead.Pray.Hodl. I'll see you in the next one.